Hello, welcome to X-Ray here at Markets.com, and we've got a quick update for you on TESCO, which just released its half-year results and dropped a bit of a bombshell on the market by announcing that Dave Lewis, the CEO, is resigning. He'll be leaving in the next few months. He'll be replaced by a veteran from Walgreens Boots Alliance, so no fears that there's any sort of succession risk there as such. But nevertheless, David Lewis has turned the ship around. He joined 5 years ago after these accounting scandals, and Tesco was facing a lot of trouble. Sainsbury's was doing a lot better back then, and Tesco really was not doing terribly well. But David Lewis came in, and with a laser-like focus on cost cutting and disposing of non-core businesses abroad and so on, he has significantly improved Tesco. And the proof today, half-year profits up by 25% to £1.4 billion. So very much leaving on a high. The market has not been distracted by the departure of Mr. Lewis too much. Shares are up a touch today, around half a percent to 1% in early trading so far this morning. I think that's really because these half-year results are pretty decent. As I say, 25% jump in half-year profits. The problem, though, is the retail like-for-likes. So we've seen like-for-like sales in the UK, and the core UK consumer business down 0.3%. They had been a bit better in the first quarter, so a very poor second quarter on a like-for-like sales basis. Booker continues to do quite well, but not as well as it was doing in the first quarter, and certainly not as well as the business was doing over the Christmas period. So we are seeing with Tesco a sharp slowdown from a very strong Christmas last year. That quarter was very good. The first quarter of 2019 was okay. This quarter that's just gone does look pretty weak in terms of sales. Tesco's under a lot of pressure from discounters, of course, and is cutting prices to try and maintain sales, but it is struggling to do that. UK like-for-likes down 0.3%, group like-for-like sales down 0.4%. So some concern maybe that these like-for-like sales figures are on the downtrend, and certainly Tesco, we knew from the Kantar data going into these results that in the 12 weeks leading up to the start of September, Tesco sales had fallen off by 1.4%. They'd also lost market share to Aldi and Lidl as they had grown their market share and continued to do that. So I think for the new boss, it's going to be a focus on Brexit, it's going to be a focus on the discounters, and it's going to be a tough act to follow. Shares, though, we are still in this broad uptrend off the 2016 low. That's around Brexit, of course, the pre-Brexit area. We've been in this broad uptrend. We're making continual higher lows at each point here, and we are building up. But we're now coming in with a shorter term downtrend, and currently trading at around 242p. So shares may struggle for uplift if these like-for-likes continue to fall back. We wonder if there's any more scope to cut costs. They may look to dispose of the Polish business. It's been a real thorn in the side. It's been a big drag for some time. They are trying to reshape their Polish business, but I think ultimately they probably want to get rid of it. Other than that, I think things are not too bad for Tesco, but I think for the new boss, concern is how do you get the share price back up to these highs? Cost cutting alone can't really do it. There's only so much you can cost. You've also got to factor in the risk that sterling drops as we hit Brexit. Also, tariffs come into play. What's the knock-on effect on consumers? Do you pass it all on to consumers, or do you absorb some of that hit yourself and therefore suffer weaker margins? So good results from Tesco, bit of a blow to lose the CEO, but no succession risk because they've already announced who the new boss is, and he seems to be someone with a good pedigree. So on the whole, decent day for Tesco, but these like-for-likes are something to keep in mind. And that's it for now. We will have more updates for you throughout the day on X-Ray.